profit and loss account and the balance sheet. Okay, before that what we'll do is we'll take up all the adjustments and then we'll mark all the items which gets affected because of the adjustment. Okay, so let's go to adjustment number 1, closing inventory, stock account debit to trading account. So in trial balance is not affecting any item. Then for excise duty and sales tax duty we have prepared a separate note 1 and note 2, okay, as we had seen that example separately. Then term loan balance interest, so fourth adjustment, so add to interest expense and less from office expense. So in interest expense and office expense we mark all the interest expense under office expense. There is no interest expense but it has to be reduced from office expense, so I'll mark it in the office expense. Okay, then next is bad debts. Okay, so bad debts, it will affect P&L, debit side, bad debts and balance sheet debtors. So I'll mark 1 and sundry debtors, balance sheet. Debtors. Then bad debts, there is no bad debts account, we have to create one. Then provision for doubtful debt, so we have to add it to provision for doubtful debts. There is one adjustment, and then reduce it from debtors. Okay, then the next one, depreciation. So all the 3 assets, amount of depreciation will be reduced from all the 3 assets, so we'll mark that in all the 3 assets. Then next is prior period adjustment to outstanding expense, that is fine, you have to create an account. Then here is a summarized impact of excise duty and mod VAT credit. Reduce excise duty from purchases, reduce excise duty from sales, and then balance sheet asset side advance excise duty paid. So we'll mark our sales and purchases since it has to be reduced from sales and purchases. We are marking this because we have to leave some space after giving the effect to those particular trial balance item, okay, for adjustment, so we are marking those items. Then reduce sales tax from sales, note 2, so sales, you have to reduce it, right, so I'll just mark this. Then next, balance sheet sales tax payable. Let's see if there is some sales tax payable. So no sales tax payable, with this sales tax paid there, so we have to adjust this from sales tax payable. Okay, now let's start giving effect to all the items in the trial balance first and then the adjustments. Okay, so first is capital 1825 500, so balance sheet liability side, capital opening balance, we'll put it as opening balance, and the amount is how much, 18,25,500. 18,25,500. Okay, next is purchases and sales. Okay, so purchases, you are showing a debit balance 40,75,000, so I'll put it here to purchases. In trading account I'll put to purchases. I'll put it inside since there are some adjustments related to purchases. Okay, 40,75,000. Then how much is the sales? 62,45,500. 62,45,500 sales. So 62,45,500. Again, this I am putting it in the inner column because there are some adjustments. 62,45,500. Now the next is returns. Okay, sales returns and purchase return. So debit side is a sales return, so we have to reduce it from sales. 22,500. So trading account credit side less sales return 22,500. Then purchase return 16,400. So reduce it from purchases. 16,400 less 16,400. Okay, then the next one, opening stock of material 2,72,500. We have two. We have raw materials and finished good. So both will be trading account debit side. Okay, it will come as opening stock. Raw material is 2,72,500 and finished goods is 3,22,400. So on trading account debit side, 2 opening stock raw materials finished goods. So raw material is 2,72,500 and finished goods is 3,22,400. Okay, then the next one, carriage inwards 45,650. 45,650 carriage inward. Since it's a carriage inward, trading account debit side. So we'll leave some space for the purchases since there are 2-3 adjustments for purchases. Okay, so I'll leave some space here. Then 2 carriage inwards 45,650. Next, is carriage outward 22,720. Carriage outward will come in profit and loss account debit side. So after trading account, we have prepared a combined trading and profit and loss account. So let's see. I'll leave some space for trading account items here. Okay, then from here our profit and loss account starts. So to carriage outwards. Okay, so how much is carriage outward? 22,720. Then the next one, octroi. Octroi is trading account debit side 5405. Octroi. So to octroi 5405 trading account debit side. Okay, then the next one, duty drawbacks less from purchases, cash assistance less from purchases. So duty drawbacks is how much? 1,22,400. Cash assistance less from purchases 10,250. So duty drawback, and we'll reduce it from purchases here. Okay. So duty drawback 1,22,400 and less cash assistance on purchase. How much cash assistance on purchase did we get? 10,250. Then the next one, excise duty paid. Okay, so note 1. So we'll be giving this effect of excise duty paid later, okay, by referring to note 1. Then manufacturing wages, trading account, debit side. How much is the manufacturing wages? 2,75,450 to manufacturing wages. Manufacturing wages 2,75,450. Okay, then next is manufacturing expenses. How much is that? 1,45,200. Trading account debit side to manufacturing expenses 1,45,200. Okay, next is sales tax paid. Again we will be giving effect of those sales tax paid after referring to note 2 later. Okay, then office salaries 1,75,200. So profit and loss account debit side, office salaries. To office salaries. How much is the amount to office salaries? 1,75,200. Then the next is office expenses 302,500, and there is one marking on the office expense, so there is some adjustment related to that. So to office expense 302,500, we'll put it in the inner column in profit and loss account debit side. To office expenses. Okay, how much is the office expenses? It's 302,500, and we'll leave some space for adjustment. Okay, then the next one, selling and distribution expenses 55,450. So profit and loss account debit side, selling and distribution 55,450. So and distribution expenses 55,450. Then the next one is land and building. So balance sheet assets at 10,55,450. So there is some marking on land and building, so adjustment related to that. So we'll leave some space after land and building and we'll put it in the inner column. How much is that? 10,55,450. Balance sheet asset side. So land and building 10,55,450. And we'll leave some space here for adjustment. Then the next item, plant and machinery. Plant and machinery is 1522,500. 1522,500. Okay, and we'll leave some space. So there is an adjustment on plant and machinery also. Then the next one is furniture and fittings, 1,75,200. So balance sheet asset side. Furniture and fittings, 1,75,200, and leave some space for adjustment. Then the next one, okay, sundry debtors and sundry creditors. So sundry debtors will come in balance sheet asset side. Then it has two markings, so we'll leave some space for sundry debtors. Okay, there are some adjustments related to sundry debtors. Then sundry creditors will come to balance sheet liability side. So sundry debtors amount is 13,45,200. Sundry debtors 13,45,200. So I'll put it here. Sundry debtors 13,55,200, and then I'll leave some space for adjustments. Then next is sundry creditors, 12,38,500. So balance sheet liability side, sundry creditors. So sundry creditors 12,38,500. So there is no adjustment, so I'll take it directly to the outer column. Okay, then the next one, provision for doubtful debts. So you have to reduce it from debtors, but there is some adjustment to doubtful debts. So as of now we'll put this provision for doubtful debt 25,200. So provision for doubtful debt will reduce it from debtors. Okay, so let's for doubtful debts. Okay, and there is some adjustment for provision for doubtful debts, so I'll put it here only. So how much is that provision for doubtful debts as per trial balance? It's 25,200. So 25,200. Okay, now let's see what is the adjustment later on. Then The next one is moderate credit receivable. So that effect will give after seeing the note 1. Investment 2,75,450. Balance sheet asset side 2,75,450. Investments. Two lakh 75,450. Then the next one is cash at bank. How much is that cash at bank? 42,250. So cash at bank, balance sheet asset side, cash at bank 42,250. Now the next one. Then the next one. Okay, next is term loan from SBI 18,92,350. So balance sheet liability side, term loan from SBI 18,92,350. So before sundry creditors, I'll put term loan from SBI. Okay, 18,92,350. Then the next transaction, cash in hand 13,275. So cash in hand, balance sheet asset side, cash in hand 13,275. Then the next one, bills receivable and bills payable. Okay, so bills receivable is your balance sheet assets and bills payable is balance sheet liability. So bills receivable 1,75,000, balance sheet asset side. So after debtors I'll put bills receivable. Bills receivable 1,75,000. And how much is bills payable? Let's see. Bills payable 85,500. So balance sheet liabilities there. After sundry creditors, bills payable 85,500. Okay, then the next one, drawings 1,17,200. We have to reduce it from capital. 1,17,200 less drawings 1,17,200. Okay, so in this way we have completed all the items in their trial balance. Now let's go to the adjustments one by one. Okay, next, closing inventory, raw material 3,75,500, finished goods 5,11,450. So trading account credit side, by closing stock, raw material, finished goods. Okay, so raw material is how much? 3,75,000. 500, and finished goods is 511,450. So you have to total it up later. Then balance sheet, second effect is balance sheet asset side, closing stock. Raw materials, finished goods. Raw material is 3,75,500 and finished goods is 511,450. Okay, now the next adjustment. Next adjustment is adjustment number 2. We'll refer to note 1 and then give the effect. Adjustment number 3 also will refer to note 1 and note 2 and then we'll give the effect. Then term loan balance includes interest of 1,72,350. Such interest is wrongly included in office expense, so we have to add it to interest expense and reduce it from office expense. 1,72,350. So profit and loss account debit side, office expense less interest on term loan. Okay, how much is that? Interest on term loan 1,72,350. Then here we have to add it separately to interest on term loan 1,72,350. Okay, now the next one. Next one is bad debts during the year not recorded amounted to rupees 16,450. Okay, so profit and loss account debit side bad debts, and then the same we have to reduce it from debtors. So profit and loss account debit side two bad debts. How much is the amount of bad debts? 16,450. And the next effect is reduce it from debtors, sundry debtors, so less bad debts 16,450. Okay, then the next one. Provision for bad debts. Okay, so provision for bad and doubtful debts is to be maintained at 2.5. So what will be the entry? Profit and loss account debit side 8019, that is the additional provision for bad debt, and then we have to reduce 8019 more from the debtors. Okay, that is we have to add it to provision for doubtful debts 8019. So profit and loss account debit side to provision for doubtful debts 8019, and then here provision for doubtful debts we have to add 8019. So the total provision for doubtful debts will be reduced from your debtors account. Okay, so that makes it 33,219. Next, depreciation. So first is depreciation on land and building, then plant and machinery and furniture and fixtures. So depreciation One effect will be profit and loss account debit side, depreciation 3,83,553. So profit and loss account debit side. We'll put it here. There is no place down. Depreciation. Okay, so we'll put all. How much is the depreciation? 3,83,553. So we'll put the total amount here. And the next effect is we have to reduce the respective depreciation from land and building, plant and machinery, and furniture and fixtures. So from land and building 52,773. So land and building 52,73. Land and building less depreciation. Which is 52,773. Then from plant and machinery we have to reduce 304,500. 304,500. Sure. 304,500. And from furniture and fittings we have to reduce 26,280. From furniture and fittings 26,280. Okay, now the next one. Next is establishment expense of last year are not recorded. So prior period adjustment account debit to outstanding expense. So one effect will go to your profit and loss account debit side to prior period adjustment 16,000. So here to prior period adjustment 16,000. Second effect will be balance sheet liabilities side outstanding expenses. So below bills payable 16,000. Okay, now the next one. Okay, now we'll see note 1 and note 2. So summarized impact of excise duty and mod VAT credit. Reduce excise duty from purchases 8,92,500. Okay, so we will reduce that excise duty, that is mod VAT credit from purchases 8,92,500. So purchases less excise duty mod VAT credit. How much is that? 8,92,500. Okay, then the next effect, reduce excise duty from sales 13,22,500. So less excise duty. How much is that? 13,22,500. And then balance sheet asset side advance excise duty paid. Okay, so there is a working of advance excise duty paid here. So excise duty paid 5,75,200 less excise duty payable after adjusting mod VAT credit. So excise duty on sale is 13,22,500 less mod VAT credit on purchases 8,92,500 less mod VAT credit as per trial balance, which is given above 1,22,500. So 307,500. Okay, but we have already paid 5,75,200. So advance excise duty paid is 2,67,700. So on balance sheet asset side, advance excise duty paid. How much is an advance excise duty paid? 2,67,700. Now let's go to the note 2, that is a sales tax. Okay, so reduce sales tax from sale 5,66,200. So 5,66,200. Okay, then balance sheet liability side, we have sales tax payable 5,66,200. Then sales tax paid, we have taken it from trial balance 3,22,400. So net sales tax payable 2,43,800. So it will go to balance sheet liability side. Sales tax payable 2,43,800. Okay, so this we have completed all the adjustments also. Now we'll close trading profit and loss account, and then carry forward our profit or loss to balance sheet, and then tally our balance sheet one by one. Okay, so let's close our trading account first. 2,72,500 plus 322 is 400 is 5,94,900. Then purchases comes to 33,450. Then sales, so your net sales comes 43,34,300. and then closing stock, it comes to 8,86,950. So your total of credit side comes to 21,250 less your total of debit side. So debit side total comes to 41,000,055. So 52,21,250. So it balances to gross profit carried down, that comes to 11,21,195. Then in your profit and loss account, credit side, by gross profit carried down 11,21,195. So your credit side total is 11,21,195. Then in debit side, 302,500 minus 1,72,350. So your office expense comes to 130,150. So your total of credit side minus debit side, so you get a net profit. So to net profit transferred to capital account, so it comes to 1,41,303. So now let's go to the balance sheet. Capital, so add net profit for the year 1,41,303. So now first let's do all the internal calculations and take out the totals in outside column. Capital, your capital comes to 18,49,603. Then liability side, there is only one internal calculation. Now asset side, land and building, Land and building comes to 10,02 677. Then plant and machinery 18,000. Then furniture and fixtures 1,48,920. Then debtors. So debtors comes to 12,95,531. And then the closing stock comes to 8,86,950. So now there was an error in writing the cash at bank balance. It was written as 45,250. Now I have corrected it to 42,250. Okay. Asset side total is 10,02,677 plus 12,18 plus 148,920 plus 2,75,450 plus 42,250 13,275 plus 12,95,531 plus 1,75,000 plus 8,86,950 plus 2,67,700. So that comes to 53,25,753. Now let's see what is the total of liabilities side. So liabilities side 18,49,603 plus 18,92,350 plus 12,38,500 plus 85,500 plus 16,000 plus 2,43,800. So total of liability side comes to 53,25,753. So our liabilities is equal to asset. Balance sheet matches. So that's all about the example on final account, which includes excise duty, sales tax and VAT credit. Okay, thank you.